Hello everyone and welcome to my morning report chart appraisals with me, Rich Payrolls analyst at Asset Markets on Monday, the 10th of July. We've got a fairly positive equity market open, but it's interesting that the dollar continues to rally in the wake of that payrolls report that we had on Friday. But let me just show you the fact that yields just beginning to tail off a bit on that. You've got the 10-year that did actually push higher on Friday, but it's just opened a little bit lower today, and the 2-year as well, which sort of held its ground on Friday and started to push lower. So is this sort of a move on these markets that is going to just start to just lose a bit of steam? It'll be interesting to see, because you've seen gold that's broken down, but equity markets have basically rallied to a point at which they're sort of back to maybe selling opportunity levels. Certainly if this S&P 500 continues to roll over, that would be interesting, posting a sequence of lower highs. DAX and FTSE basically both just back to their neckline resistance levels, and just struggling to continue that rally. So there are sort of arguments that would suggest that perhaps this is going to be a move that just starts to lose a bit of steam, really, this equity market rally. In terms of the dollar, we've had that sort of rebound front end of last week. Bit of a rebound again on Friday on the back of that payrolls report, but I would still question that payrolls report as well. The fact that we had average hourly earnings disappointing again. So you had the headline strength, but sort of average hourly earnings were a bit disappointing. So it is still questioning the inflation in the States, and I think that if this 10-year yield starts to sort of roll over, it'll be interesting, because that would be again the market questioning the Fed and its tightening cycle, I think. Anyway, what have we got to look forward to today? Well, not a great deal in terms of economic data. Where is my data? Here. In terms of economic data, nothing really. You've got, you had Chinese inflation this morning, basically in line with expectation, and sort of helped us improve risk appetite a bit, but yeah, nothing other than that really is there today. So that takes me on to my chart of the day, which is the FTSE 100. Now, as I said, FTSE and DAX basically both rallied back to their neckline resistance levels. And FTSE this morning had a strong open, but failed at 7388. You've got these two levels here which sort of mark the neckline. 7378 as that reaction low there mid-June, but then 7389 was that mid-May low. So that's sort of a sort of gauge of the neckline, and again it seems to be failing around that neckline and rolling over. Now, momentum indicators under 50 on the RSI, although it has ticked high today, sort of reflecting this little rangy period, it's still below 50, and MACD line still falling below neutral. Stochastic still sort of negatively configured. I think it's sort of struggling to get through this this level, and you see this dotted blue line here. We're basically still sort of testing that 6-month uptrend, and I think we could still have a retracement back towards that long-term uptrend, which is currently coming in around about sort of 7190 area, and the target from that top pattern, completed top pattern head and shoulders, 7070. So I think that there is, 7170. So I think that there is scope still for a correction on FTSE, and I think that this little intraday rally today hasn't sort of really sustainably made any sort of move. RSI on the hourly failing around 60, MACD lines still below neutral, stochastics beginning to lose a bit of steam. So yeah, I'm still sort of selling into rallies on this FTSE. So I wish you good luck in your trading today, and I will speak to you later. Thank you.